Ever thought about investing in gold? Maybe you have, but then thought, that's probably just for the super rich, right? Well, what if that's not really the case? What if it's actually more accessible than you think? Today, we're doing a deep dive into exactly that. We want to figure out how you can smartly and affordably get gold into your investment mix. We're digging into an article by Doug Young. He's a gold IRA and precious metals analyst called How Much Capital Can You Afford to Tie Up in a Gold Investment? Our goal here is really to cut through the noise and give you the practical steps for making gold investments work, even if you're starting with, limited capital.
Yeah, and what's great about this piece is it does two things really well. It covers the basics, the why gold part, but it also gets very practical with affordability tips. It sort of lays out a roadmap, which is perfect if you're trying to figure out, okay, what's gold's role for me and how do I actually start?
Okay, let's unpack that foundational stuff first. Gold as a go-to strategy for stability that goes back centuries. What's the real core appeal? Why has it lasted?
Well, it's not just luck. The article points straight to its stability. Gold just doesn't swing up and down as wildly as, say, tech stocks or crypto.
Yeah.
And interestingly, it often has what they call a negative correlation with traditional
A
assets.
negative correlation.
Well,
So when stocks go down, gold might go up.
exactly. Or at least hold steadier. So it acts like a counterweight, especially when markets get choppy. That's a huge part of its role as a stabilizer. Then there's the inflation hedge aspect. This is a big one.
Right.
When inflation kicks up and your cash buys less, gold, being a real, tangible asset, tends to hold its value or even gain some. It helps preserve wealth. Plus, diversification. Adding gold isn't just spreading risk, it's like adding a different kind of safety net. It can protect against those really sharp downturns elsewhere in your portfolio. And finally, don't forget liquidity. You can usually buy and sell gold pretty easily, almost anywhere in the world, which means you can access your cash relatively quickly if needed.
Okay, that makes sense. Stability, inflation protection, diversification, easy access to cash. So for your portfolio, it adds this layer of security and balance. But hold on, before anyone rushes out to buy, what's the essential groundwork? What questions should you be asking yourself first?
Good point. You absolutely need to start with your financial goals. I mean, are you thinking long-term security, like for retirement?
Yeah.
Or you may be looking for shorter-term gains? Your goal really shapes your strategy. Then, market research. And this is more than just checking today's gold price.
Oh,
It
yeah.
means understanding its history, how it reacts to things like interest rates, the strength of the dollar, even geopolitical events. You need that context.
So seeing the bigger picture, not just the day-to-day noise?
Precisely. And you also have to be honest about your risk tolerance. Gold is stable, yes, but not entirely risk-free. A strong dollar can push gold prices down, for example. Or changes in interest rate policy can affect its appeal because, well, gold doesn't pay dividends or interest. You need to understand those specific dynamics. And if you're thinking physical gold, you absolutely must consider storage solutions. Secure storage isn't free. That cost needs to be factored in from the start.
That's a really practical checklist. Okay, so you've done your homework, you understand the appeal. How do you actually buy gold? It's not just about gold bars, is it?
No, definitely not. There are actually quite a few ways to invest. There's physical gold, of course, bars, coins, even some jewelry. Tangible, you own it directly. But like we said, storage and security are key. Then you have gold ETFs, exchange-traded funds. These basically track the price of gold. Often they hold physical gold in a vault somewhere.
So you get the price movement without needing your own vault?
Exactly. They trade like stocks, usually have lower costs than holding physical bullion directly, and they're very liquid. Makes them popular for many investors. You can also invest in mining stocks, so shares in companies that dig gold out of the ground.
That sounds potentially more volatile, though.
It can be, yes. Company performance, operational issues, discovery successes, these all play a role beyond just the gold price. But the potential returns can also be higher because of that leverage. And finally, there are gold mutual funds. These usually hold a mix of things, mining stocks, maybe some ETFs, other gold-related assets. You get diversification within the gold sector itself, managed by professionals.
Okay, lots of options there. Now let's hit that affordability question head on, because that's often the biggest hurdle or perceived hurdle. What's the general guidance on how much to even allocate?
Well, the article echoes what many financial experts suggest.
Yeah.
Aim for no more than 10% of your total investment portfolio in gold. It's not a rigid rule, obviously, but it's a common guideline. It lets you benefit from gold's properties without putting all your eggs in one basket, so to speak. And remember those extra costs we mentioned.
Right, storage, insurance.
Yeah, for physical gold. And for
Right.
ETFs and mutual funds, you'll have management fees, maybe trading commissions. You've got to factor those into your budget calculation to be realistic.
Okay, 10% guideline, factor in costs. So how can you make it more affordable, especially if even that 10% feels like a big chunk right now?
This is where it gets clever. First strategy, buying in small quantities. The article really highlights this. Instead of saving up for a big 1-ounce bar, you could buy smaller amounts like 110th-ounce coins or even tiny 1-gram bars. It lets you build up your holding gradually over time, maybe using dollar cost averaging, without needing a huge lump sum up front.
That really does open the door for a lot more people, building it piece by piece.
It does. Second, think about choosing affordable gold types. We already touched on this. ETFs often win here because you skip the storage and insurance costs of physical gold. And while mining stocks are riskier, they can be a lower cost entry point for some, giving you that leveraged exposure. And third, really focus on minimizing transaction and storage fees. Shop around for dealers selling physical gold. Look for low premiums over the spot price. Compare storage options. Maybe a bank safety deposit box is cheaper than a specialized vault for smaller amounts, or even a good home safe could work initially. And for ETFs or funds, always compare those expense ratios. Those fees add up over time.
Really practical ways to chip away at the costs. Okay, but what about someone listening who thinks, great, but I literally have no spare cash to invest right now? Is there any path for them?
Actually, yes, and the article covers this too, which is quite interesting. If you have an existing retirement account, like a 401k, 403b, or a standard IRA, you might be able to invest in gold without putting in new money. It involves something called a Gold IRA. Essentially, you can transfer or roll over funds from your existing retirement account into a special IRA that's allowed to hold physical precious metals.
So you're using money that's already saved for retirement.
Exactly. The key thing is, the physical gold or silver has to be held by an IRS-approved custodian in an approved depository. You can't just keep it under your mattress. There are specific IRS rules about the types and purity of metals allowed, but the process of setting up a gold IRA is often more straightforward than people think, and it allows your gold investment to grow tax-deferred within that retirement wrapper.
That's a potentially huge option for people wanting diversification without needing fresh capital.
Okay, so let's say you have started investing in gold, maybe through an ETF or a gold IRA. How do you manage it effectively going forward? Right, it's not just set it and forget it. Effective management is key. First, tracking your investments is vital. Use software or even just a good spreadsheet. Keep records of what you bought, when, at what price, and what the costs are. Knowing your numbers helps you see how it's performing, decide when to potentially buy or sell, and spot if costs, like storage fees, are getting too high.
So staying on top of the details makes sense.
Definitely. Second, remember, diversifying portfolios is an ongoing thing. Gold is part of the mix, but it should be balanced with your other assets, stocks, bonds, maybe real estate. Because gold often moves differently, as we discussed, that balance helps smooth out the overall ride for your portfolio, especially during market stress. And third, think about reinvesting profits. If you do sell some gold for a gain, what do you do with that money? Reinvesting it, perhaps buying more gold if prices dip, or putting it into another part of your portfolio that's maybe underweight, helps you harness the power of compounding and keeps your allocation strategy on track.
Active management, tracking, rebalancing, that makes a lot of sense for ensuring gold actually helps you reach your financial goals.
Absolutely. These practices help make sure gold is pulling its weight effectively in your overall strategy.
Well, this has been incredibly insightful. I think the main takeaway is pretty clear. Investing in gold doesn't have to be out of reach. It can be accessible, it can be affordable if you approach it strategically. Remembering that maybe 10% guideline, knowing the different ways to invest physical ETFs, even through an IRA, and then managing it actively, it really demystifies it.
Right. And maybe a final thought for you listening. We've talked about gold's history as a hedge against uncertainty, and we've unpacked these different ways to invest affordably. How does knowing this shift your perspective on building a resilient financial future? Now that some of the mystery is gone, what's maybe one small step you could take, even today, just to explore if gold has a place in your own portfolio?